Welcome to Monday Night Live with EntreDot. Tonight we're going to explore a topic you don't usually see covered much. But I tell you, with litigation increasing to probably a double-digit paces, and all the risks that are occurring to any size business for that matter today, business insurance is becoming more and more important. So we have a special guest tonight, since I'm not an insurance agent, as you know, but I have great appreciation for what these people do. I'm glad to welcome Wade Associates. Now, Wade Associates is a North Carolina insurance agency. They have 3 offices around the state. They've been growing quite nicely over the last 2, 3, 4 years, with offices in New Bern, Davidson, just outside of Charlotte, and Wilmington. My special guest tonight is Kevin Flowers. Let me show you what he looks like here. Uh-oh, 3, 2, 1. There we are. There's Kevin. So welcome, Kevin. Here's Kevin's contact information. I'll leave it up for a little while. But Kevin, welcome to the program. I really appreciate you being able to join us tonight. Of course, we have rehearsed this ad nauseum. Yeah. so we're going to keep to the script. You notice I'm kind of unconventional with this kind of stuff. They wouldn't have me on Saturday Night Live, for example. But look, let's start with you introducing yourself.
Sure.
You've been in insurance for a while. How did you get into it? Why do you like it so much? How do you view the comment I made earlier that insurance is becoming ever more important? In fact, new forms of insurance and new policies that are dealing with just tremendous risks that are facing us, which we'll get into in our discussion today.
Yeah.
Tell us, of course, about Wade Associates and what its vision and mission are.
Definitely. No, I appreciate you having me on, Bill. Myself, I've been in the insurance industry for about 7 years. I started just as kind of your hometown Main Street agent, writing homeowners insurance and automobile policies, and was approached a number of years ago when we were opening an office in Wilmington with Wade Associates to come on board. And it was a pretty intriguing change, mainly because Wade Associates, we were founded in 1992 in Davidson, North Carolina. We work with clients all throughout North Carolina, but the specialization that we have as an agency is in 5 main verticals. We specialize in technology, life sciences, social services, manufacturing, and healthcare. We've grown those verticals tremendously in the past 3 to 4 years. By getting into the Raleigh, RTP, and Wilmington and Greenville markets. The reason for those target industries is there's a lot of similarities. We find that those 5 verticals require a lot of regulatory and contractual insurance consultation, are generally your more agile companies, are facing quick and severe litigation. And for us, as an insurance consultant, it allows us to go beyond insurance placement and allow us to work with our clients on reviewing operations from 4 positions instead of 1. Those 4 being risk avoidance, risk transfer, risk mitigation, and the final, which is where most people are operating in, is risk retention, where you as a company is retaining all the risk. We take a little bit different of approach. We like to work in those 4 positions to really identify and help people balance risk better than retaining all of it. We've been active members of the North Carolina Technology Association, new members of the Network for Entrepreneurs of Wilmington, which is how Bill and I met, the Cucaloris Connect Executive Board, which is a technology conference here in Wilmington.
Yeah, very good.
Recently began getting involved with the North Carolina Biotechnology Center, and also a number of other organizations that we lend our time and really immerse ourselves into to understand those verticals we work in prior to writing insurance coverage on something we don't even understand.
Your words are right on in my book. I haven't heard you describe it quite this way before, but you are finding out a lot about the industries you support. And I bet you go the next step in trying to understand the needs of each of the businesses you try to help. If you do that, you are a very valued advisor, like you're talking about.
Absolutely.
This risk management consultancy that you talk about. So you apparently do a lot of listening before you act and say, okay, here's your policy.
Yeah, a lot of listening and always being around people smarter than me, which isn't a difficult task. So
I highly relate to that. So let's get it right on into the subject. I'll make it so people can see you better. I'll take your logo down here. Ta-da! There we go. Now we can see each other and look at each other if we want to. But look, let's cover. I don't know. I picked the order of things here. One I'm most used to is directors and officers in insurance. Now look, I've been an officer. I've been a director. I've insisted upon, if you're going to have me on your board, you better have a damn good D&O policy that covers me. It's because these people are, have assets that bad guys who want to litigate against the company for bad decisions, governance decisions we made, can take our assets too. So start by talking about the kind of the market trend of, is this getting worse? More and more risk is emerging and more demand for this is occurring by these directors, and then get into what the heck is directors and officers insurance and what does it cover?
Yeah, there's a lot more awareness to the directors and officers coverage. Just as investing and venture capital continues to grow and continues to invest in these companies, the importance and reliance of it, it's showing up in every contract and every term sheet that's being used now. Like you discussed, a lot of the common triggers of directors and officers insurance policy is, the directors and officers position of breach of contract, wrongful termination, breach of fiduciary duty, securities fraud. These all fall back on ultimately the board of directors because they are the ones responsible for those large, big picture operating decisions. What's happened recently is, through intense litigation, is these suits now pierce through the company's policy. Once the policy limits of coverage are exhausted, and are now holding board members personally liable for losses. That means, your high net worth individuals that are serving on your board of directors are now, personally targeted their assets in additional lawsuits. So really, like you said, it's to increase the funding potential of lawsuits by finding different avenues of suit to different, portions of the company operating. And it is increasing. And with that increase, you're seeing people rely on that as requirements of term sheets, and especially if, an investor is also serving on a board or occupying a board seat. Like you said, I wouldn't invest in a company, serve on the board of that company without some sort of, insurance response for my position there.
I always just say no.
Probably
until they convince me otherwise.
Yeah.
And go ahead and cover what does D&O actually cover?
So it's surprisingly an incredibly broad coverage form. Its coverage is for lawsuits. That's strictly what it is. It's a liability coverage only.
So it covers legal fees.
I'm sorry?
it'll cover legal fees and damages.
Settlements, damages, and the problem with it is there's a limit on the amount of coverage you can buy for it, which is why they're then going different avenues to further fund these lawsuits. So, with it being a rather newer introduction, a newer insurance coverage, they're finding different ways to pierce that corporate veil or those corporate policies in order to find funding for bigger and longer lasting lawsuits.
Yeah, so that's D&O in a nutshell.
In a nutshell.
And I call this kind of a related policy, but I should have thought about it more. It's not that related. That's the key man policy. So it's important individuals, but it's like if you got a CTO and a technology company and the company's really them, if you lose them, you've lost all your investment. Or you got a CEO that's just a rock star in the industry. If you lose that person, then you're equally in trouble.
Yeah.
But tell us more about what it is and how prevalently it's used today.
Definitely. The value I don't think is the person, especially in a CTO's position. It's that brain that holds all that information, all that.
Right.
If they have,
you don't care what wire it goes to, right? We don't care what it is in here.
Yeah. But the key man insurance, it's a life insurance product. So it's not a property and casualty product. And it's a life insurance product for business continuity. It's purchased and paid for by the actual company. The company is then the beneficiary of that policy. So any essential members or corporate officers or people that hold a key position within those companies, whose death would require an immediate injection of capital to say install replacement corporate officers, replace loss of income, or repay debts and investors if the company is ultimately shuttered. That's who is being covered under these key man life insurance policies. Yep. Generally, you're going to see them required on a term sheet as well, especially for a smaller startup.
We've done that.
That investment usually is with one person in a startup company, and that's all they're really after is the ideas and the know-how of that one person. So, that person is the most valuable part of it, and this is the only way to properly mitigate that risk of losing that person and that investment that that they've made.
Yeah, we've done that in our investor group. I agree with you.
Definitely.
Thanks for the quick answer on that. Hey, look, this next form of insurance is something, when I was running companies, I'm not sure we even had cybersecurity insurance policies back in the 2000 to 2005 era. But today, man, there's hacking, there's ransom, there's stealing credit card numbers, email addresses, and the list goes on. Everything. And with impunity. So tell us more about what cybersecurity insurance is and how the heck does it cover the liabilities for loss of this kind of valuable information, let alone money.
Yeah, so you're right. It's evolved throughout the years. The late 90s is really when it was introduced, and I think at that time it was called Internet Liability because even then the Internet was a pretty new thing. It was network security, and now it's become Cybersecurity Liability Insurance, and in a couple of years we'll have a new, broader name for it. But you're right. It has to evolve with how the risk evolves, and it evolves quicker than anyone can understand it. Like you said, you have so many different targeted cyber attacks or methods of ransom and all these different sophisticated ways in which people are stealing data that we can't keep up with it. The industry can't keep up with it. The industries that are being hacked can't keep up with it. It is a challenge, and it's definitely the most complicated challenge that I think the insurance and risk management industry is facing right now. Quick stat on it, Inc.com said that 60% of small businesses that were hacked last year went out of business within 6 months. Now, I think that will change just because of the awareness in the marketplace for cybersecurity liability insurance, but that's still a staggering amount of businesses, and something that could have been mitigated and could have been covered. I think one of the biggest challenges right now that we're facing with data is the introduction of cloud-based hosting in cloud-based services software companies. Because there's a lot of misrepresentation as to who owns the data at the event of a loss. And the position generally, as we've seen, is that the data is owned by the original data owner. And you think, well, I'm paying someone else to put it in their cloud, they're responsible for it. Your contract does not state that in more ways than not. And it becomes even more complicated because the cost of hosting is so much that now your third party is using a third party like AWS or one of these cloud vendors. So you've got all these different hands touching your data, but really it all falls back to you as the data owner. So yeah, there's an assumption that people have successfully transferred risk of data by cloud hosting. But that's really not the case. To answer your question on, what is covered under a cyber liability policy. So there's really two parts to a cyber liability policy. You've got your first party insuring agreement, which is going to be the loss to your actual business. Think of things like cyber fraud, like phishing or social engineering.
Ransom.
Your next part's your network extortion. So that's your ransomware, your direct denial of service, bricking attacks. Those are also covered under, the response is covered under the cyber liability policy. But then you also have the cost for the digital data recovery, so the forensics, to make sure that it actually wasn't compromised. And they did actually release all the data untainted back to you, is a portion that has to be covered under the policy, as well as any network or infrastructure rebuild. So all those trigger the response of the cyber liability policy to your business. And then you have all the contingent loss of business income for the days or weeks or months that this whole process took place. Specifically for the people that we work with in the technology industry, technology service providers have a second part of that cyber liability, which is the third party insuring agreement, which is when you lose your customers' data, not your data, but when you are responsible for
the data that they own, I lost.
Yep. So you're talking your PCI and payment card losses, like Target, in 2014.
That's what I'm thinking of,
breach of privacy, incident response for credit monitoring, regulatory proceedings, forensic investigation. It's a really complex coverage form that has to be a top point to go over. Not just once and done. Every year is new things or new risks are introduced, new carve backs by the insurance companies are introduced. There's a lot of diligence that goes into these, and rightfully so.
Yeah, very complicated. I suspect there's more to come in regulation and law to clear up. Who's accountable, who's at risk, who pays. Because if you I guess contracts have to change between, like user agreements have to change. Like Facebook's got to have some accountability for losing my information.
Definitely.
Which I entrusted to them, but I doubt that they're, I don't know. I've never read their user agreements.
No one reads the 60-page user agreement. You just want to go post your pictures.
There you go. Post my stuff. Yeah. More to come on this one. We probably could do this program every year and see new security issues. Let's switch to another one. This one is the famous errors and omissions insurance, commonly known as professional liability insurance. That's the insurance company name for it. We call us guys in the gutter, we call it errors and omissions, mistakes that are made that cost money. Mitigate your way out of. Tell us more about what it is and how important it is even today.
So most every company is going to carry what's called a commercial general liability policy. The problem with that is, your commercial general liability policy has two absolute exclusions on it, and those are exclusion of professional services, exclusion of computer-related services. If you've ever looked at an insurance policy, those are two pretty broad definitions to have no other explanations beyond that when your insurance policy is 250 pages long. That's it. That's all it says, and there's no further definition on the commercial general liability policy. And for good reason, because you should look to your commercial general liability policy to respond to bodily injury from premise liability or a tangible product failure. Financial loss is covered through a completely different responsive policy. And a lot of people don't go that extra mile to see that that's not covered under the commercial general liability, because it is always required, or generally is required by contract, to carry a commercial general liability policy. But really, your true exposure, especially as a technology service provider, is in the technology errors and omissions coverage. And again, that's with the introduction of cyber liability is confusing it even more, because as a technology service provider, what other damage can I do than losing people's data? Well, technically, once that data is lost and there's a period of indemnification to your client, that's picked up under the technology errors and omissions coverage, because you created an error that then caused a data breach, but then caused a contingent business income to your client. Essentially, you are just going down the rabbit hole and trying to find the right coverage for it, because it's complicated losses at this point, and a lot of them are contractually driven. That you're now finding that contracts are requiring separate and distinct policy limits for that cyber liability and that technology errors and omissions and that commercial general liability policy. So they don't want to see it all on one policy. They want to see separate policies for each of those coverage limits, for a separate and distinct limit of coverage for response as well.
Yeah. Everybody should have this. I mean, this is, somebody falls down in your building, you're going to get a lawsuit. At least pay medical expenses so you don't get a lawsuit. So thanks for that.
Yeah.
The last one is, I don't know how to explain this, but the way I'm thinking of it is in contracts, you have this concept of indemnification. And so who the hell pays for that?
Right.
So where liability insurance meets with contractual arrangements where indemnification is involved, and perhaps other things as well. But tell us more about the importance of having proper coverage for cases where maybe one of your employees brought proprietary information with them, and
sure,
you're stuck.
Yeah. Essentially on most contracts, you have two parts. You have your insurance requirements and you have your indemnification agreement. Insurance requirements are quantifiable. It's, you need this amount of coverage and you need to provide me a certificate of insurance in order to do business with me. The indemnity portion is essentially saying, if you do anything that's not covered under the insurance policies, then you're still responsible and you're going to pay for the financial loss I suffer. So that's really where that technology errors and omissions brought in that requirement for indemnification outside of the insurance or the required insurance policies. I'm going to read a quick indemnification agreement. Just the last sentence.
We'll have all night now. Come on.
Yeah, we're running short on time, so just one part of it. So client further agrees to indemnify and hold customer harmless from and against any and all liabilities and damages, whether incurred as a result of a judicial decree or a settlement, and the costs and expenses associated with any claim or action of the type identified in this section. That sounds like a blank check, if you ask me. And
I said anything.
That's how I'm not a lawyer, but that's how I read it. And that's how courts are going to read it as well. So, whether you carry the proper insurance coverage or not, your contracts are still indemnifying people for that loss. Whether you carry it or you do not, you are saying, I'm prepared to cover what I've caused.
Yep. Okay, so the warning there is be careful how you indemnify without limits and specificity.
Definitely.
Well, we pretty well covered this subject, didn't we? We did it in 25 minutes.
Hey.
But look, we have a couple of questions, but you already answered. I want to ask you a different one.
Sure.
And step back from it all here. On a day-to-day, week-to-week, month-by-month basis, you and the rest of people at Wade are dealing with all sorts of insurance demands. What are the hottest insurance topics today? Then I want to ask you as a follow-up, what do you think the next big insurance issue is going to be that we're going to be dealing with, say, in a year or two?
That really depends on the size and the position of the company. Cyber liability still is a number one driver of conversation. The directors and officers, people are understanding the cost of liability versus quantifiable stuff like commercial auto insurance or property insurance. Those are easy to understand and you can quantify those quickly. When you start getting into lawsuits and now class action lawsuits and clients of clients that you have an exposure to their data at this point, you're talking about compounding lawsuit potential. And it's the driver of conversation. People want to make sure they're balancing their growth and profit with risk and loss control now. And that's an important position to be in. Even small startup companies are concerned about it, or their investor or board of directors are making them concerned about it. So I think anything relating to liability, especially surrounding technology, data, positions of directors and officers, employment practices, anything where you have a lawsuit and a requirement for settlement and defense, those are the drivers of our conversations right now.
Yeah. But it's like, particularly in cybersecurity, it's like the Wild West.
Definitely.
So one final question, Kevin. It's just apparent to me that small business owners know very little about the risks that they're facing. And I don't find a whole lot of resource other than bothering an insurance agent to call them in or just stick them on you, and you do these one by one. Are there any seminar programs in our community college system or universities or private sector that you know of where we can send people to learn more about what they really ought to be doing with respect to insurance, business insurance?
Yeah, generally in the private sector, you will see this sponsored by insurance agencies, law firms. Not so much in the community college. Some universities do have risk management programs, Appalachian State, NC State, some others throughout the United States. But really my recommendation is, finding a trusted advisor in insurance, someone that understands your industry and is willing to spend the time with you. I think disputes continue to move quickly into litigation. Your insurance representative needs to become a part of your team of trusted advisors, to be held to the same standard as your attorney, your financial advisor, your accountant. They need to be asking the question, what keeps you up at night? And build your risk management program from that. The internet, seminars, you're going to get a lot of broad insurance definitions and answers. But when it comes down to it, the most efficient way to build a risk management program is to find someone you trust and allow them to do what they've spent years doing.
So just take them on one by one. What's up?
Yeah.
So if I get a list of insurance agents like you, I just send them over to you. That's okay with me. But I'd rather send them over smarter.
Yeah.
But look, I won't take any more of your time tonight. You've been very generous to join me. So I put up your Wade Associates contact information again. So Kevin, thanks again. It's very informative. A subject that I don't find many people talking about, and I think it should be.
Yeah.
Because it just represents just a tremendous risk. It would hurt small businesses really bad if they get themselves mixed into a major lawsuit.
Definitely. I really appreciate you having me on, Bill. I look forward to doing it again.
Yep. See you in Wilmington.
Okay. Thanks, Bill.
Have a good evening. Bye-bye.